Hello everyone, this is Debbie Giordano and you've tuned in to Valley Homes on TV. You're watching Channel 26. We air on Monday, Wednesday, and Friday at 6:30 p.m. and Saturday and Sunday at 9 a.m. for those folks that want to get up early in the morning. And Todd, welcome back again, and thank you for coming. And
it was great to be here. We have fun doing the show together, Debbie.
We did. We were just talking to our guest about how long I think the show's been on the air for maybe a couple years, and you and I have been teaming up for the past year.
Yeah, a little over a year, so we've been doing this together.
Right, presenting information to Milpitas residents and homeowners about the value of owning a home here in Milpitas and different.
That's a great place to live and work.
It is.
So,
well, you and I do.
Well,
so.
Absolutely. We swear by it. So.
Well, who did you drag into the set today?
We have a great guest today.
All right.
We haven't heard me talk.
We've got Chris Acker, who's joined us today. Chris is with CV Acker and Associates, and Chris is an insurance guy.
Great.
And so,
how did you two know each other?
Well, Chris and I have known each other for a number of years. We belong to an organization called the Financial Planning Forum, which is a consortium of financial planning professionals,
awesome.
CPAs, financial planners, estate planning attorneys. It's based over on the peninsula, and both Chris and I actually are past presidents of that organization.
Oh, that's wonderful, wonderful.
So, you know, as we were talking at one of our past meetings here about the whole subject of real estate and property, the topic of how do people ensure that they protect what they have came up. And so I thought it'd be great to have Chris come on today and talk a little bit about, you know, how should people plan appropriately if they own real estate to protect that investment. For many of us, it's our largest investment that we have is our home. So Chris is here to
Thank you, Chris,
talk with us about that.
Coming.
Thank you. I appreciate being here. Yeah, I have known Todd for a number of years, and it's a pleasure to be here. So how do we protect the most important asset? And being in the insurance business, I deal with people, not the actual tangible assets. So I'm not going to be talking about homeowners insurance.
Okay.
You know, if you purchase a home in the state of California, you have to have homeowners insurance if you're financing that.
That's
I believe
correct.
the lenders make you do that. So it's pretty much automatic. When you drive in the state of California, you must have a minimum amount of insurance, and you know they can penalize you severely if you don't have that proof of insurance. But what else is there? What's the biggest asset? And from my standpoint, the biggest asset isn't necessarily the actual property that you're talking about. I think the biggest asset is really the ability to purchase that property, and that's your income.
Okay, well, does that come under the veil of the question about how much insurance do I need?
Absolutely. It's how much and what kind, and those two questions go hand in hand, and you really can't answer one without the other.
Right. Well, let's jump into that.
Okay, so I think first and foremost, from a real estate standpoint, the number one cause of foreclosures in the United States is medical disability. People go into the hospital. They typically, you know, either are underinsured or uninsured, or they are taking care of someone else, and they lose their job. They can't work. They lose their ability to pay the mortgage, and then they get behind.
I had read somewhere where the medical disasters were one of the leading causes of financial bankruptcy.
52% of the foreclosures are due to the disability of one or both
So basically what happens is people get themselves in a position, maybe perhaps through no fault of their own, most of the time that's the case, that they're unable to make those payments, make the obligation they have for the mortgage on their home.
I think the underinsured aspect is very interesting. How do you know if you're underinsured?
Well, that's, you know, it's somewhat subjective. You know, typically people really don't like insurance. I mean, you know, they purchase it because they have to. And with disability insurance and life insurance, the two things I'd like to talk about, you know, there is no one, the government has not mandated purchase of those two things, yet in fact it's a financial disaster if you can't pay your mortgage. So, you know, how much insurance You know, we are wired. We are wired.
Is that President Obama calling?
It is. It's, forgive me.
He wants to talk to you about his health plan.
He does, and you know we're extremely tight. And I have to tell you that you know we're talking about healthcare reform.
Healthcare reform.
But really, you know, how much insurance do you need? Well, first of all, disability insurance. I mean, you know, if it were possible to insure 100% of your income, I mean, being in the insurance business, I would automatically say, well, then insure it. However, realistically, most people, at least in Silicon Valley, Milpitas, this area, are working for larger companies. Although statistically in the United States, most people work for companies with 100 or fewer employees.
Okay.
Larger companies, more than 5 or 10 employees, typically provide a long-term disability benefit as part of their benefit package. So that's good. Those benefits are received taxable because typically you're not paying for that benefit as an employee. They give it to you, and the IRS says that if you're getting that benefit, it's taxable. So a typical benefit formula would be the insurance company will replace 60% of your pre-disability earnings. So if you just use
go back a year, or do they income average?
Well, they take a look. If you're an employee, they take a look at payroll. If you're self-employed, then they take a look at tax returns, and it's typically the highest 24 consecutive months out of the previous 60. Oh. So if you have a good year, it's averaged in with the not so good year.
Right.
But the vast majority of people around here in this area, have a disability policy through work. The question is it enough? And it's usually not.
Okay.
If you work for a very large employer, they give you options to purchase. They give you flexible dollars in these flex plans, they're called, Section 125 cafeteria benefit plans. Then you can pick and choose. Ironically, the choices that those employees make are typically vision coverage, dental insurance, even pet insurance. I mean, they're offered through these things, and they either take a minimal disability benefit or they choose not to get disability. I've seen that numerous times in the people I work with, and the question is, well, how come you didn't take this? And they say, well, I'm not going to get sick or I'm not going to get hurt. Well, statistically, it's a huge problem, and you'll lose your home if you're not planning properly.
Mm-hmm.
So, as a rule of thumb, should people be looking at perhaps just covering that mortgage? Is that a good rule of thumb, or how would you?
That's a great place to start. It is a good question, and it's a great place to start because the mortgage numbers in this area typically get to be pretty big. I mean, it's not uncommon. I mean, $1 million sounds like a huge amount of money on a mortgage. I mean, for a home to purchase, and depending on what your loan to value is, Todd, all about that. But if your mortgage is $300,000 or $400,000, and your payment is $2,000 or $3,000 a month, I'm just ballparking, then yeah, you should certainly insure your expenses. The taxes, I mean, they'll put a tax lien on your home if you don't pay your taxes. So when you go to sell it, they'll recover it plus penalties. They add up. But really, mortgages, any kind of fixed payments, if you have, automobile payments, if you have anything that you're paying on time, an installment time, you should insure that. PG&E, anything. But a better way to approach it would be to take a look at the amount of insurance they give you through work and figure out your expenses and what is the shortfall. And usually you can supplement with individual insurance. Now you have to find an insurance agent or broker to do that. Not a lot of those folks specialize in disability anymore because in the state of California the claims experience was so high that a lot of companies pulled out of the disability insurance market.
Okay.
So there are lots of things on the web. You can Google, do a search on disability insurance. You'll find if you have an agent already, use that agent and talk about it.
Chris, let me ask you, does Social Security cover any of those aspects of the
Great
disability?
question, and they do, but you have to be severely impaired. You have to be basically totally and permanently disabled, and statistically fewer than 30 claimants for